Hi everyone, welcome back to the Audit and Attestation class. In this class, we'll be understanding how to use the work of specialist when it is being engaged by the auditor. Let's dive into for more detail.
Cool. Okay, so next is work of specialist engaged by auditor. Okay, let's do this. Work of specialist. Specialists like actuarial, certified valuer, certified engineer, tax specialist, right? ID specialist, those all are called specialists. A specialist is a person or a firm possessing special skill or knowledge in a particular field other than accounting and audit. Accounting and audit, we feel like we are the expert, right? And actually, we are the expert. That's the reason we are doing CPA. So arrangement with the specialist, there could be two kind of arrangement. It can be part of the audit team, like for example, tax specialist, tax team generally we have like part of the audit team. ID team also like is generally is being part of the audit team, and it can be third party. Third party can be of management and can be of auditor. So third party could be like for example lawyer, for example actuarial, for example valuer, certified engineer. Like those could be the third party specialists, right? So the specialists which are part of audit team like tax specialists, ID specialists, we need to supervise their work, right? We need to communicate the objective of the work to them, and we need to meet them time to time. We are at the planning stage, execution stage, we should go parallelly to understand how things are going, and then we can take the objective decision on the conclusion reached by them, right? So when you are part of the team, so we'll be consider them as the part of the team, and we will involve them in the planning stage, execution stage, and conclusion stage, and we will take their inputs for the respective financial statement audit, right? Now coming to third party. Third party is the external party, right? It may be lawyer, it may be actuarial, it may be valuer, it may be certified engineer, right? So clearly define, in that case of scenario, we need to clearly define the following in agreement. If CPA specialist or CPA specialist or evaluate its management specialist, whether it's CPA specialist or it's a management specialist. So we need to keep following things in mind. First is objective and scope of the work. If you are involving any lawyer, so what is the objective of involving him, and what all case he or she is dealing with, right? Second is representation of any relationship between specialist and client. So if there is any relationship between like specialist, for example, actuarial or maybe the valuer, he is also being a relative of the director, right? Then they need to disclose that relationship upfront, right? So we need to assess the independence, or we need to assess their integrity and competency accordingly, right? Then method or assumptions they are using. For example, you have involved actuarial, whether they are using Black-Scholes model, they are using different models, right? So we need to understand what model they are using and what assumptions they are considering for current period or previous period. And then understanding the specialist understanding of using the work for intended purpose. So we need to understand from the specialist what they understand about the engagement, right? So that we both are on the same page. Then fifth one is responsibility of the specialist for appropriateness and reasonableness of the method and assumption used. So how specialists understand and evaluate the reasonableness of the method they are using and the assumption they are considering for the respective calculation. And the last one is form and content of the specialist report, how they will be reporting to the management or to the auditor. So these all things you need to understand when you are involving third party specialist. Make sense? So far so good?
Yes,
Getting into audit?
Yes, sir.
Feel आ रहा है? We are in audit.
ज़्यादा ही आ रहा है.
This was not so easy as I was expecting. Huh? Now I can feel it. Yes, it's not easy. Okay, so what are the auditor responsibility when you are involving specialists? First is obtaining an understanding of method and assumption used by specialists, testing the appropriateness of data provided by management, like for actuarial valuation. I'm sure you might have heard provision for leave encashment, provision for long-term employee benefit, provision for gratuity, right? You might have heard about these terms in your financial statement, right? Yes, no?
Yes, yes.
Right?
Yes,
How those provisions has been calculated, you may involve actuarial. But how that actuarial do the math? Based on the payroll data they receive from management, right? Number of employees, their date of joining, their date of birth, their salary structure, right? Their age, their service period. They consider all this information. They take all this information from management. So as an auditor, it's being our responsibility to test what is being information management is sharing to the actuarial. Is the actuarial using the same information or different information as an input of the data for their calculation? Third is evaluate the specialist report, the related financial statement assertion, for the related financial statement assertion. So here you need to evaluate the specialist report, for example, actuarial report, right? Fourth is CPA should accept the report of a specialist. Generally, we accept and we rely on the specialist unless our other audit procedure says different, right? Unless the audit procedure determine that the findings are unreasonable. So general principle, thumb rule is that we rely on the work of specialist, but if we found the misstatement, if we found something different in the corroborative of the information when we are doing audit, then we will question to the specialist. Then we will discuss with the management. Then we will discuss with the specialist. Like this is what our observation is. For example, if you are doing audit of payroll, right? You identified the monthly payroll expenditure is, let's say, $1 million. And actuarial has considered $800,000 as a monthly salary expenditure. So that means what is this 200,000 gap? That may result into huge difference in the long-term employee benefit provision, right? Right, because that is on long-term basis, right? So then you can discuss those things with management and actuarial and understand what is the difference, and then if needed to correct them, right? And if and probably sometime you will get some adjustment entry to correct yourself as well. So it depends on like nature and situation. Fifth is, if there is a material difference between specialist report and the assertion in the financial statement, the auditor should apply additional audit procedure. Now, for example, you found $1 million is the salary expenditure, but actuarial has considered $800,000, and actuarial is not ready to revise the report, and management is also not comfortable in revising the report. And now the long-term employee benefit expense and provision, according to you, is not right. Then you need to plan and perform additional audit procedure. You may involve your specialist, you may involve your actuarial, right? And if your actuarial is agreed to you, then the difference can be considered for the qualification or modification, right? Make sense?
Yes, sir.
Okay. So if there is a difference between auditor and specialist opinion in subject matter, the auditor should obtain another opinion if possible, right? For example, like management has involved a lawyer and he is dealing with that case. Because he is dealing with that case, he will always say like, we will win the case, right? But you have previous experiences, like these kind of cases generally company lose. And there is some other, you can say, litigation passed by the High Court or Supreme Court or Tribunal against the management and against the company. Right? In that case of scenario, you have difference of opinion. Then you may involve third-party lawyer for the assessment of the same, if possible. Right? If the difference cannot be resolved, the auditor should qualify or disclaim from the opinion. Make sense? If the auditor issue unmodified opinion, no reference of specialist is required. But if you are issuing qualified opinion or adverse opinion, then you can mention the specialist for the better understanding of the reason of qualification for the user of financial statement, right? In unmodified or unqualified report, no requirement for the reference of specialist. But in qualified or adverse opinion, you can give the reference of specialist if you feel giving the reference of specialist will be helpful for the user of financial statement for better understanding purpose. Then only you will give the reference, otherwise not. Right? Next is use of ID specialist. Auditor should consider the following factor: complexity of the system and IT controls, right? Significance of change in IT environment, extent to which data is being shared among the system, right? Extent of entity participating in e-commerce, right? Usage of emerging technologies like Bitcoin, NFTs, or you can say SAP, Oracle, or many other technologies. Significance of the audit evidence in electronic form. So if you feel all these things exist, it is always good to involve ID specialists along with you. Audit procedure that auditor may assign to the ID professional in your team. Inquiry procedure for initiation, recording, processing, and reporting. ID journal controls, applications control, right? Then inspection of the system documentation like flow chart of the system, observation of the transaction, planning and performing of the testing of IT control. All those things you can delegate to the IT team. Now, so far we discussed from the audit side. Now in attestation side, if you are using the work of specialist. So what is the CPA responsibility? They need to assess the competency, capability, and objectivity of the specialist, nature, scope, and objective of the specialist for which they are involved, roles and responsibilities, nature, timing, and extent of the work need to be involved, and engagement partner is being ultimately responsible for determining the work of specialists, satisfy the engagement objective. These all things you need to consider. And reference of specialist in attestation engagement. If you are making a modification, then you can give the reference if you feel it is good for the better understanding of the user of the report. Last one is agreed upon procedure. Agreed upon procedure are generally like agreed between specific party and the CPA, right? They are explicitly agreed, like CPA will be performing this procedure, and in those explicit procedure, they are saying you will involve the specialist, IT specialist, tax specialist, or actuarial. Then you will be involving the specialist, right? And describing the nature of assistance you have taken from the specialist in your report. Make sense? So this is all about using the work of other, in which we have discussed group audit and we have discussed specialist. Internal audit we'll be discussing tomorrow, right?